Good morning, traders. It is Thursday, 8:02 a.m. Chicago time, coming to you from the Chicago Loop Financial District. It is the 28th of January 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Couple of news items overnight. The key of which just came out a few minutes ago. I posted it on Twitter. Russian Energy Minister Novak says Saudi Arabia proposed that each oil producer cut output by 5% apiece. This caused a strong pop in crude here. Crude shot up from about 32.61, 32.76 actually, up to where it is now, around 33.77 on the high. Pretty big move there. Other than that, we had Facebook earnings yesterday. They beat 79 cents versus 68 cents expected. Revenue surged 52% to 5.84 billion, easily beating the 5.37 billion anticipated. Shares of Facebook about 11% in pre-market, and of course the Nasdaq is reflecting that. The Nasdaq is up only second to crude in the list of issues that I monitor. Nasdaq's up 1.14% right now, up 47 points, 48 points, moving fast. Samsung's earnings plunged. Samsung's having a hard time, just like Apple is. Deutsche Bank had an awful 2015, 6.8 billion lost in 2015, making it the first losing year since 2008. UK GDP was in line. China provinces across the country are reducing their growth targets. And what else is there? And then in the U.S., some key earnings came out. Caterpillar reported 74 cents versus 71 cents, 11 billion versus 11.3 billion in revenue, and issued some guidance and some comments about growth. You can look that up. Initial jobless claims came out a half hour ago at 278,000. 278,000 versus 281, slightly better than expected. Continuing claims 2.27 versus 2.22 million, slightly worse. December preliminary durable goods orders came in at negative 5.1 versus negative 0.5, much lower. Durable X transports negative 1.2 versus negative 0.1%. Again, the driving news right now is Russia's energy minister Novak revealing a proposal by Saudi Arabia to cut production by 5% in crude oil. That's how things are shaping up. As far as what we have on the day, looking ahead of today, we have at 9 Central, 10 Eastern, we have pending home sales expecting 0.9% year on year, 4.8%. EIA natural gas at 9:30 Central, 10:30 Eastern, expecting negative 211. I don't think I've seen a number that big in a while. Natty gas negative 211, and Kansas City Fed at 10 o'clock Central, 11 Eastern, negative 10. As far as speakers, we've had Costa, ECB Speaker Costa already speaking, but Weidemann is expected to speak at noon. ECB Weidemann, a hawk, speaks in Bonn, Germany at noon Central, 1 Eastern. After market, we have Visa, Amazon, Amgen, and Microsoft. Let's look at how things shaped up yesterday. Very interesting day yesterday. I'm sure many of you who have attended the Trader Bite could identify with the levels that were covered here. But overall, yesterday, what amazing movement, especially after the Fed. The the primary idea is for an attempt lower and then a push higher towards 1903 to take out the 1903 high. We went to 1902 on Friday and couldn't get there. We pushed to 1910, pulled back. We got the FOMC release, which was considered negative. The FOMC pushed higher to 1908.50, I believe, and then they moved down through the profile and started to take out bottoms. Once it got through this 88 low volume node left behind from Tuesday, and below that this 1881.75 area, the probability, as mentioned in the morning trader bite, was 1865.50 being the key area to test below. I've been talking about 1865.50 for about a week. Yesterday we took it out, and look here, by 2 ticks before the bounce. The bounce here looks small, but actually that bounce was approximately 15 points, 14, 15 points from the low to the resting high on the close. So yesterday, another neutral day. So we have a normal variation day here. We've been having a lot of neutral days. Neutral day back here. I think this day one ticked. No, it came up short. This was a normal variation day, neutral day, and then yesterday, neutral day, breaking the top and bottom. Yesterday almost was a neutral extreme day. Unfortunately, it did not close near the bottom, but it did close outside of the initial balance, which is debatable. The bounce up was pretty strong. I did not expect a further push into the overnight session for the one reason, for the key reason, and it is that it has already tested the high volume node before getting a strong bounce. Had it moved, had it stayed down, oh, let me look at this risk issue here. Okay. Had it stayed near the low and had it built this high volume node near the low instead of up here, I would have been in agreement that we're likely to push lower into the overnight session. But it did take a bounce. It had some resistance here at 1878 or so. It held that resistance and finished with a multi-distribution profile. We have a triple distribution profile, and we are currently in the middle. So what does that mean to us? Yesterday's auction was very, very thorough for a Fed day. I mean, it tried really hard at the top. It tried really hard at the bottom. It traded everything in the middle multiple times. And so we end up with this triple distribution day. And so we have to line up and look at what we have as far as the cutoffs, and that's what we need to watch. So currently we're in the middle here between 1878 and 1899. That's the area that we're trading. The key expectation for today, given where we're opening, the key expectation is a very choppy intermediate to short-term trader in control, meaning fairly wide rotations. But overall, I'm expecting it to chop up and then start to move into the higher volume node and start walking itself up to the 1915. Again, in case you haven't been here for the last couple days, the 1915 is a key area above, is this key point of control above. It is the next heavy distribution. We could not get to it. You notice yesterday we stopped right at the low volume node in this composite area, right against the low volume node. We had a composite low volume node that helped shut off buying. A great sell opportunity there. I was on day trading radio when I announced that trade yesterday, but a great short opportunity on the Fed release that ended up rotating all the way through to 1865.50. But overall, the goal is 1915 quarter. Remember, if I reduce this profile by just a couple days, you notice that the point of control shifts from down here to right in line, right in line with the point of control we carried from way back in the fall, in the August-October timeframe. As we throw these additional days in, especially Monday, we end up shifting the point of control down to 1890. We're on top of the 1890. The market is moving in that area. That's why I expect it to be choppy on the open, and I expect it to tackle this 1909 area, and I expect it to get to 1915 eventually. The market is geared up. It has found buyers yesterday. It is more likely geared up to rotate up from here, to resume its rotation up as it's been doing. So we have fallen, bounced, fallen, bounced, fallen, bounced hard, pull back, and then we tried to bounce yesterday. This is the inverted head and shoulder I was talking about in yesterday's Trader Bite. I expect this pattern to continue and for it to push higher into 1915. The secondary hypothesis, and not too far behind, is the opposite, is that it chops around, gets to this 18 to this 1900 LVN, 1899 LVN, and it starts moving down to resume the Fed push. But I don't see that as a high probability. The target, if it does continue to go lower, comes from the multi-day composite. So here we are. We're building a composite here since last Friday. That's the area we're trading in right now. That's the composite we're in. Again, we are right up against the point of control of this composite. That's why I'm expecting chop. That's where that comes from. But overall, I'm expecting us to get down into this low volume node on the composite. So around I believe it was 1848. The 1848 area becomes the key target below. If we start to move down beyond there, 1835, and then we're back into the Wednesday where we had that big bounce. We're back into auctioning this big day here, a 65-point bounce that day, a reversal day. But that is a lower probability expectation. It's in the cards, but it's not likely to be the play. So I'm looking for chop, 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 push, base, and then push through, and then start to make its way down up to 1950 as the primary game or primary play of the day. We'll see how that plays out. I'll keep you updated on Twitter. Stage 5 traders, please remember that we have our AMA webinar, weekly AMA webinar this afternoon at noon. You will get the invite in the email, via email shortly. Thanks for tuning in. Just as a reminder, watch your risk. Risk comes first. Dominate your risk first so that you can let your runners run and you're not choking off trades immediately after you put them on. Learn to trust yourself. Good luck.